Hello and welcome to Ticker Tapes. Today, we're taking a look at the world of ETFs. We saw some rotation as far as ETF flows were concerned last week, and the move was something of a 180 as far as recent trends are concerned. At the beginning of the month, $3.6 billion found its way into the MSCI Kokusai ETF, which tracks the performance of developed equity markets excluding Japan. However, the fund has lost 4.43% over the last month, and those losses seem to have been the signal for traders to cut their position. $3.75 billion left the ETF last week as a result. Meanwhile, money has moved back into tech and growth ETFs. IWM, the iShares Russell 2000 ETF, saw inflows of almost $1.7 billion last week. Year to date, the ETF has lost 11.59%, and that figure jumps to more than 15% if we look at its performance over the last quarter. Traders may think the Russell 2000 index has now fallen too far. Research from Bespoke Investment shows that more than 36.2% of stocks in the 2000 index are now trading below their pre-COVID levels, though Bespoke also note that the average Russell 2000 stock is still trading some 36.28% above its February 2020 price. Investors are also moving money back into large-cap tech with just over $1.5 billion flowing into QQQ, the ETF that tracks the performance of the NASDAQ 100 index, although it's worth noting that at the same time, $719 million came out of Vanguard's Information Technology ETF, VGT. Outside the equity index tracking funds, one of the most active issues over the last week was the S&P 500 Financial Sector ETF. More than 60 million shares in the fund changed hands last Friday alone, although that turnover figure is actually below the average daily volume for the ETF, which saw daily volumes regularly exceed 100 million shares in late January. Over the last month, XLF's price has gained 2.15% compared to a 2.12% loss in the wider S&P 500. However, that gain is less than half of that enjoyed by the financial sector's biggest constituent, JP Morgan, which is up by 4.68% over the last month, reminding us that diversification doesn't always produce better returns, though of course it does spread your risk. Now, looking at some of last week's biggest movers, UNG, the U.S. Natural Gas Fund, rose by 7.7%, taking its year-to-date gains to an impressive 25.46%. Though we might expect to see further gains here as European gas prices have jumped by 20% in recent days as events on the Russia-Ukraine border continue to heat up. UNG was only outperformed by its competitor BOIL, the Ultra Bloomberg Natural Gas ETF, which is a 2x leveraged product that uses gearing to produce larger price moves. There were also gains for ETFs that track wheat, WEAT rising by 5.54% over the last week. GDX, the VanEck ETF that tracks gold miners, rose by 3.08%.